Hi, this is Shane with the Rational Trader. It is Wednesday the 15th, and we're looking at the ES here. The markets were really volatile today, not unexpected given the overnight range. The NASDAQ continued to struggle with getting nicked, so really a function of volatility. We'll look at that in a minute. We're going to have to make a decision there on how to approach that. This is the ES, which we're kind of putting through its paces here. With some initial parameters. We didn't start till 7:05 today, so that's here. You can see here nice 251, which says I think this break is going to fail. We don't take it though because this looks sideways now. We're outside the value area. The value area is way up here. So we broke out. We broke out there, and so we're below the value area now. And what's happened here is we've pulled back to this low volume node here. It first formed there. And then a nice signal, but our chop avoidance keeps us out of that move. It's a nice 5 or 6 point move there. Some choppy ugliness that's tough to catch. I really like that. Just in terms of, okay, you pull back and you can see the orange bars are, we're looking for a signal there. There's a decent probability of getting a nice short signal right on that bar. Didn't get it here though. You'll see a couple other cases here though where we actually picked the peak of the valley. A short here, which we don't take because there's no down bars. So that's one of the verification things that we do. So we missed that low. Point of control here is now moving up with price. That's this blue line here, right? So now we're back inside the value area. The value area low is way down here at the low now. So enough trading occurred below the initial value area that we've got a new one. Again, you got to like what you see there in terms of this is the place to be looking. We've come up to this low volume node here. Just with the price action here, I can tell you you're not going to get a signal from my machine learning system. Just the way that you go straight up and then straight down. That's too hard. That's too hard to see. It's too hard to find something there. Here we pick the absolute low here. We get to this low volume area right here. A nice turn signal. Trade management takes us out a little too soon. So first target there. And then the trail gets us there. Just a couple of ticks too soon. And then this is interesting here. So we get long here, all right, stop to the tick. So that's a little bit of a volatility issue. But immediately get long again. And then, make 2 points and 1.5 points on the trail right to there. Something very difficult for a human to do. So have to try twice to get in there. Give some of that back on a short right there. And then get long here. It's really the same thing. Get long there and take a half loss. Right, because you get enough that you move the stop to entry -2. And then immediately get long again and make 2 and what is that? 1.5 on the trail right there. Long here on a predicted break failure, which takes a loss. And then just a gorgeous short right there. I love that pull back to the low volume node. We don't get filled is the problem because the order gets placed right there. And we don't get filled there. So again, picking that peak is really nice. Here, picking the absolute low. First target is there, and then we actually do an add right there on this break, which is ends up you end up netting only a single point there, because what happens is when we break through there, we add. We now have 2 contracts. Stop moves to break even +1, and then starts to trail by 8, and so we end up making 2 3/4 on the first really the second contract, and then losing 1.25 on the add. By just doing exactly what we wanted to do though. And then let's see, along here that's too aggressive. Another gorgeous Long signal there where we don't get filled. Oh, this is something to think about now. So the order gets placed right there. Doesn't get filled. Too aggressive short right there. Another short here that we don't take because, well, at this point it's after 12:40, so we're done. But we wouldn't take it anyway. Is that right? No, we would. We would have gotten short right there. In any case, 12:40 is when I stop, which is right there. So no trade there. The net here and all that was 5 3/4. A lot of opportunity in terms of, you know, cases where it's predicting well but not getting filled. So we got to think about that. One other thing to note. Where was it? Let's see. Right here. Okay, so we're exiting the value area. And so the bars are orange because we're close enough to the value area low that we want to start looking for signals. And the signal to be looking for here is really the break off of here. All right. Or the break off of here, right there. Now the problem is that there is no wave there. You see that? How the way these, I think I have the wave setting too high. This looks to me like it should, the wave should look like this. All right, and so it's the kind of thing where we, you know, kind of wasn't sure what that setting should be. So it's currently 8 ticks. So the market's got to move 8 ticks in the other direction before it considers the wave complete. Typically, I do twice the bar size, and the bar height is 3 ticks. So that would be 6. So I suspect I will change that for next week and see what the impact is, if I like that better or not. I left it. The reason it's 8 ticks is that I originally was doing this with 4 tick range bars, and I was finding that I wasn't getting enough signals, and I was having a real difficult time getting filled and still using a 4 tick stop. So I went to 3, and I like what I'm seeing here, but I can see some adjustments. So that's something that I'll be thinking about here as we go through the rest of the week. Let's take a quick look at the NASDAQ now, which struggled with getting nicked again. Again, the NASDAQ being a thinner market, it whips around quite a bit more. And so I got some decisions to make here. Let's see, where's the start? Again, we didn't start till 7:05. So the first case here is this is just a beautifully predicted short here. This bar is the high of this pullback here. You can see it's very similar to what we saw in the ES, where earlier we fell through the value area low. Now we're pulling back to it, and I get stopped out by 2 ticks or by 1 tick here. So it's, you know, I get filled there, right there, and then I get 10 ticks, which is sort of half my first target, and then move the stop to entry -5, and then get whacked and then get nicked right there. Okay, so the thing to think about here is if instead of 2 contracts with a 10 tick stop, you used 1 contract with a 20 tick stop. So you know, this is a standard operating procedure when the market gets volatile. Cut your size in half and double your stops. In that case, this trade would be profitable. All right, so we'd end up, you know, a 20 tick stop. You get 10 ticks, you move to entry -10. You'd survive this whippiness here and get this nice. This is a 20-point move. You can get this nice move here. We're outside the value area, so the chop avoidance is in play here. So none of these trades are being taken. Here, it's kind of similar to the previous case where it sees this, you know, this is going to happen here, or rather it's predicting that that's going to happen. It's either a little too soon or the market is just whippy enough. Again, if you use a 20 tick stop here, you're going to, are you going to survive it? Let's see, 32.75, just barely. So I would call that luck rather than skill that you'd survive that with a 20 tick stop. And then where's the third one? Or was that it? I think that was it. Anyway, so three trades and I'm done. I won't risk more than that. But let's look at the rest of the signals here. No signal there on this pullback here. Pullback to that, these low volume nodes, and then you can see why this low volume node forms. The market falls through this level. If you just draw that line right here, it falls through that level and then just can't get back through it. So then a low volume node forms, and now we start looking. So I like that, but we're in anti-chop mode here, so nothing's going to happen there. Nice opportunity for a break signal there. So breaking that level, and because you're near that low volume node. So I was emailing back and forth with a member today, who didn't understand that the low volume node, it doesn't give you a directional bias. It just says there hasn't been a lot of trading at this level. There has not been today a case where a lot of buyers and sellers have gotten together and said, yeah, we both think this is a good place to transact business. Okay, so we were talking about how the low volume node, what it gives you is an understanding that price has not spent a lot of time here. And so there's a reasonable expectation that that will continue, which either means it's going to bounce off of it, right? Or blow through it. There is no directional bias. There's no, you don't have a, because the low volume node is above price that you now are going to look short. That's not what's going on here. Instead, this area looks good to us because we're at a low volume node. Let the machine learning system look at the order flow and make a prediction. That's what's happening on every one of these orange bars. And so what we've done is we've said, if you're at a low volume node, our expectation is we're not going to stick around there for very long. Make a prediction. Does the order flow look like something you've seen before? Is there a pattern in that order flow that you can use to give us an edge? Okay, and the same thing is true for the value area edges. That's what this is here. So if you use only low volume nodes, you really restrict yourself a lot, because there's a lot of activity right at these edges where the market, you can see it happen over and over and over again. You're seeing it happen right here where we pull back to the value area low, and then we fall back through it and pull back to it and fall down and pull back. So this is exactly the right places to be looking. So in terms of selection criteria for trade location, I really like what I'm seeing here. The NASDAQ has been volatile enough that I'm getting nicked. This is the second day in a row now I've got nicked to the point of serious pain. And so the decision that needs to be made is, okay, are you gonna just stick it out or switch to a single contract with a 20-tick stop? And I don't quite know the answer to that yet. I don't like to change midweek, so I'll probably just write it out and see, and then on the weekend make a decision if the volatility continues to be high, that I will change my trade management strategy. So we'll see. Okay, so we'll see what tomorrow brings, and then we've got Thursday and Friday left in this week.